Let's jump right into this explainer, where we're unpacking a massive transformation. We are looking at Coinbase's evolution from what was, just a pure crypto trading platform into what's rapidly becoming this wildly diversified, multi-product, on-chain ecosystem. If you've been following crypto at all, you know exactly how wild the ride has been. But what's happening under the hood at Coinbase right now? It's a fascinating story of serious maturation.
Now, to make sure we aren't just getting swept up in the usual crypto hype, we are grounding our entire analysis today in verifiable, hard financial reality. We're synthesizing in-depth equity research from DBS Bank and CMB International and cross-referencing all of that with the very latest insights straight from Coinbase's Q1 2026 earnings transcript.
But before we really map out the whole company, I want you to consider this staggering number, 13. That represents the consecutive quarters of positive adjusted EBITDA that Coinbase has delivered. I mean, think about what the crypto market has actually done over the last 3 years. We're talking fierce, face-melting bull runs, crushing bear markets, and literally everything in between. Through all of that brutal volatility, they've maintained positive adjusted earnings for 13 straight quarters. It honestly speaks volumes about the underlying durability of their model.
So here's how we'll structure today's explainer. We'll start with the new Coinbase, then break down their Q1 2026 earnings. After that, we'll look beyond crypto trading, touch on AI and efficiency, cover the risks and market headwinds, and finally wrap up with valuation and outlook.
All right, starting with part 1, the new Coinbase. They are actively redefining their core identity. They're no longer just a place to buy and sell Bitcoin, right? They're actively building out a vertically integrated stack. We're talking institutional custody, staking services, and of course their own base layer 2 network. By owning the infrastructure at literally every single level, they're building this powerful structural moat that traditional fintech competitors are just finding incredibly difficult to replicate.
And that infrastructural moat, it's directly translating into market dominance. Not only are they the largest publicly listed exchange in the US, but they just captured a record 8.6% global crypto trading market share in the first quarter of 2026. To put that into perspective for you, their market share has grown roughly 5 times since Q1 of 2023. They are relentlessly consolidating dominance globally, even when the broader market feels, well, a bit soft.
Moving on to Section 2, Q1 2026 earnings breakdown.
So the real question is, how does all this market dominance translate into actual quarterly financial health? Well, they ended Q1 2026 with an absolute war chest, over $10 billion in cash and cash equivalents. When your total available resources hit that $12 billion mark, you buy yourself immense flexibility. It essentially means Coinbase can play offense and invest through any market cycle completely regardless of what the broader economy is doing.
Now, taking a closer look at their quarterly performance, you can definitely see the impact of market cycles. Total revenue came in at $1.41 billion, which is actually down 31% year over year. Transaction revenue specifically took a pretty hard hit, dropping to $756 million due to depressed spot trading volumes across the whole industry. But, and here is where that structural strength really shines, despite those double-digit top-line drops, they still maintained over $408 million in adjusted EBITDA. That's a real testament to a durable business that can stay highly profitable even when trading volumes totally dry up.
Okay, let's jump to Section 3, beyond crypto trading.
If you want to understand the future of Coinbase, you have to look at their revenue split. For the first time ever, subscription and services hit a record 44% of net revenue. They're aggressively pivoting away from relying solely on transaction fees. And a massive driver of this 44% slice? It's the economics of the USDC stablecoin, which generated a staggering $305 million in revenue just in this past quarter alone.
Let's break down that diversification even further, because these specific growth vectors are wild. They have $19 billion in USDC held on their platform. Guys, that is more than 25% of all USDC in circulation globally. Then, add to that their push into institutional derivatives following the Deribit acquisition, which saw volumes absolutely spike, up 169% year over year to $4.2 billion. Plus, they're even launching a prediction market, aiming for $100 million in annual recurring revenue by the end of 2026. They are rapidly, and I mean rapidly, building stable, recurring fee bases that aren't just tied to the daily price fluctuations of Bitcoin.
Let's transition to Section 4, AI and efficiency. CFO Alicia Haas perfectly captured a massive internal shift at the company recently. She noted that they are dealing with market headwinds, sure, but simultaneously transitioning to AI-native operations.
This duality is driving a current corporate restructuring, which includes an estimated $50 to $60 million cost in headcount reductions for Q2. Basically, they are actively leaning out their human workforce to let AI pick up the slack.
Now, you might be wondering, is that AI transition actually working? Well, consider their engineering output. Because of their integration of AI tools, developer pull requests, which is a key measure of engineering output, are actually up by 78% year over year. So they're proving that they can do significantly more and innovate much, much faster with a leaner, more technologically augmented team. It's a real game changer.
Next up, Section 5, Risks and Market Headwinds.
We have to stay objective here. So looking at the balance of risks, you have a very distinct bull versus bear scenario. On the bull side, you've got pending legislation like the Clarity Act expected this summer, which management hopes will solidify their regulatory moat, preserve staking rewards, and really attract institutional capital. But we can't ignore the bear case, which is heavy right now. Severe cyclicality is a very real threat. The broader crypto market cap dropped over 20% quarter over quarter, and volatility in long-tail assets is sitting at historic lows. And as we know, that absolutely crushes retail trading enthusiasm.
The immediate pain of those headwinds is pretty striking too. Q2 transaction revenue was tracking at just roughly $215 million through early May. Now compare that to the $756 million they printed in Q1. This sharp drop underscores a vital risk. Despite all those incredible diversification efforts we just talked about, Coinbase's near-term earnings remain highly sensitive to Bitcoin and the broader crypto price cycles.
Finally, let's look at Section 6, Valuation and Outlook.
Looking at forecasts from DBS Bank, we see some pretty wild numbers. There's a massive drop in the price-to-earnings and EV to EBITDA multiples from 2026 to 2027, which suggests analysts actually expect Coinbase to successfully normalize its earnings as it pushes through this current cycle trough. Basically, the market believes that the currently suppressed earnings are just temporary, not structural.
Because of this complex dynamic, institutional sentiment is definitely split right down the middle. On one side, CMB International issued a strong buy rating with a $235 target price, heavily weighing Coinbase's long-term market share gains and their structural moats. But on the flip side, DBS Bank maintains a much more cautious hold rating at $200, primarily due to that severe near-term weakness in transaction revenues that we just went over. It's your classic battle between long-term vision and short-term reality.
So what does this all mean? Ultimately, what you should take away from this explainer is a question of speed and resilience. Can Coinbase's structural diversification, their huge move into stablecoins, institutional derivatives, and AI-native efficiency actually outpace the inherent volatility of the crypto economy they operate within? It's literally a race against the market cycle, and how quickly they can shift their revenue pie will determine their ultimate success. Thanks for joining me today, and definitely keep an eye on how these next few quarters unfold.